And one thing about Apex is we're up for like teaching you multiple ways to trade, and for you learning how to read the market, finding the way that best makes sense to you. Okay, so this morning the show starts up on the bull bear binary hour. A lot of times we're trading Nasdaq. I like to trade Nasdaq. It's a pretty easy one to read for me, and I especially like those morning time trades right around 10 o'clock. And on Fridays is a big thing that we do. So it's what I see. I back up. I'm looking at the chart. Okay. First, let me show you what I see, and then I'll show you how I made this chart. And I'm not trying to say this is how you should do everything in the world, but Uh, anyways, let me go over here so you can see a little bit more in what I saw when I woke up. Okay. So I get up. I'm looking at the charts. We're gonna start the show right there. Okay. This is when the show starts. Okay. 10 o'clock. And so I see the market has done what? It's come down. It's bounced off this ice level right here. Okay, broke through the settlement and went through the lower ice level. It came down, and we had a couple support zones. It's been breaking them the entire time on exceeding volume, and that volume is just rising, rising, rising. Okay, and boom, it bounces right off another support level, and this time it does it on exceeding volume. Turns around, goes back up, flying up. I'm like, okay, this is probably going to settlement, but I bet it'll at least get pretty close to this level, so I'm looking for a short. I'm looking for a solid short. So the market's rising, and this is I'm not like looking to I'm not like, oh man, I missed it on that run. I'm like, what is the next possible trade? Like I think there's a very high probability we're going to bounce on back down today. We already had a one deviation down move, and but I need to have the chart tell me that first. So I see it going up, going up, get right about there. We didn't quite hit it. We're like it's right before. I'm expecting to move somewhere to here, okay, to either hit off the ice zone or hit off settlement. And we also have a resistance right there on our institutional zone. So we got a lot of things stacking up, and I mean it's just coming right to it, like it doesn't want to touch it, okay. And then it starts turning around, and then all of a sudden everything goes short, right there, okay. So I just start seeing pure red, okay. And this is using, by the way, the new trend bar, the trend chop filter for the bar, diagnostic bar trend chop filter that colors the bars for you. And since it colors the bars, I use open, high, low, close because I want to see the true close of the bar. Because it'll put green on a down bar and red on an up bar, okay, or red on a down bar. It'll put the color. It doesn't care what direction the bar closes. It's what is the trend. And so I see everything flipping. Then I see MVP flip. Okay, so we got MVP flipping, we got trend confirm flipping, we got trend bands flipping. I'm not trend confirm. We got a trend flip flipping, MVP flipping, and we got the trend filter also showing short. So like everything is red now. There's nothing left. It's like right here. If we go back a little bit, we still had a green MVP, but it was straight, which means it's probably about to break. And on that next bar, boom, it breaks. That's where I go short, right there at 10:08. Okay, so if we look over at my transaction history, okay, this is live. See, live dark blue, you know. Well, you see, I take my first, I take 10 contract shorts. That's like on short 5 Nasdaq contracts, okay, because every 2 is equal to 1 future on Nasdaq on the U.S. Tech 100. It's different for each future. And if you don't know how to get those ratios, check this out right here. A lot of people don't even know about this icon. See this little paperclip looking thing? If you click that, it'll open up and it tells you all sorts of interesting information, such as the underlying symbol is the NASDAQ. It takes 2 NASDAQ on spreads to equal 1 NASDAQ future. The tick size of NADEX is 0.1 for $1. Tick size of NASDAQ in Q is 0.25 for $5. And here are the trading hours, tick sizes, everything, of all the contracts for the spreads on NASDAQ. So very helpful little link for you there. And that's on all the markets. Okay, so we're going over here. I go short. And it's ticking down, ticking down. Okay, here's what I'm expecting. I'm expecting us to actually pull back down to the 1 deviation level. We had a caller call in. Mike, he's been following me for a long time. He's an awesome trader. He's basically found that when he sees the market bust through half a deviation, okay, on exceeding volume, that over 90% of the time, it'll hit 1 deviation. So if it goes through -5, he'll usually see it go to 1. If it goes through positive 5. So you should go to positive 1. Okay, over 90% of the time. So that's how he trades. Now, we've already hit it once, so I'm a little bit cautious today, but we've hit it once. And I expect what's going to happen is, because I'm looking at all this, and so you need to look back on the charts to help your emotions before things happen. So I'm looking back on the charts, and what do you notice at this 0.5 deviation level? What has happened in this zone right here? Right there. Have we got a little oscillation happening? Do you see all that oscillation that's happened? The market came down to that, bounced off of it, came down, bounced back up to it, finally worked its way through, broke through. Y'all see all that order flow that's happened in that one spot? Well, I don't even want you to think chop. I just want you to see. But you're right. There definitely was some chop earlier, at night, but earlier this morning. But I want you to see all the orders that were there. There was a lot of orders being filled, right? So it's sort of a magnet level, right? So it's sort of proving itself because it hit that, it hit it, it bounced off of it, hit it, bounced off of it, hit it, bounced off of it. I mean, it's been a good chunk of the day right on that price. So should I be surprised when it hits 0.5 if it hangs out for a little bit and bounces around? Should that surprise me? Like when it goes to it again? Or should I expect it just to fly right through? So I'm going to expect it to oscillate a little bit. But I do expect that we're going to continue down. If it starts going up, I can always abandon the trade, okay? But it helps me as a trader psychologically to know, to at least have an idea of where I expect the oscillation, okay? I don't expect the oscillation when we break down like between this 0.7, okay? I don't expect too much, maybe a few minutes, but we haven't spent as much time at that level. We'll probably have a little bit right here, and then but I do expect it like just to break on down. That 0.5, I expect it to, hang out for a little bit. But I'm short already, because I got short back here, and I'm targeting down here. So, and I'm like, man, if we can get through this thing with some volume, then I got a nice early entry, or you could wait, whatever, but I got a nice early entry, and move on down. So it's coming on down to it, and then I'm excited, man. I'm about to clean up. I'm making money. I am emotionally, if I'm looking at my P&L, a little bit fighting right now because I'm up like, $500 on this first 10 contracts I put in. And then it goes up on me a little bit. And then I'm, only up 200. And then I'm up, 300 and 400, 500, 300. Right? So it's doing this whole little game on me right here. Okay? It's oscillating. I expected it to oscillate. Okay? Now, I have a couple choices on how I can trade this. One, I could take it off when it hits that level where I expect oscillation. Often I will do that, and then I'll wait for a breakthrough. Two, I can go, you know what, this is what I expect to happen, and so I'm just going to ride through it. All right, now I also have a second trade, so let's see what time I got it at. Okay, on the same market. All right, so then I shorted another 10 of but I did 43.30 to 43.40. I did that at 10.22. Okay? So we've been oscillating around right now, and I'm thinking this thing's about ready to go short. I'm going to wait for it to go short, but when I see it start ticking down, which is exactly what happened, because at this point, I'm like, we've probably pretty much done oscillation dance. Okay? It doesn't, look at how long, usually it doesn't spend too much time in there, but I'm expecting here any minute now this thing to break down. Goes up, and then all of a sudden it starts dropping right there. Okay, I'm going short. Okay, I'm already in short. I stayed in my short. It was tough to stay in my short because it basically went right back up to where I got in. So my $400, $500 profit, which would be like $40, $30, $40, $50 on one contract. Okay, it sort of just wiped out. But now I'm like, okay, now I think it's really ready to break. So now I'm going to add in. So what I did is I added in my first position, and I added in a second one after I thought it was done with its little dance, and went short on it. Okay, and it also a little bit on me, made me a little nervous, and then all of a sudden it breaks down and starts going. And it doesn't make it easy on me. Okay, we hit 0.7. We get a little bit of oscillation there, but it doesn't really hang out. It busts right through that support level. I thought it was going to do that. I actually took off half my profit on my The second ones I added right here because I'm like, yeah, this is support zone. I'm going to take off half just in case. And I took those off, and then I took off the other 5 when it dropped on down. And right there. Now here, that's what I expected, right? I expected to go to 1 deviation. So what should I do on this trade? Like, it went right to where I said I think it should go. I had to go 1 deviation. It busted through the half. I mean, everything lined up. What should I do right here? Take profit. Exactly. Now, this is the advantage of trading more than 1 contract at a time. I'm not saying you got to trade 10 or 20, but more than 1 gives you a massive advantage because you're psychologically free to take some profits, lock them in, look at the next trade. I took 5 of the contracts off, okay, that I had on there. And I'm like, I'm going to see if this thing busts through because, I mean, what if it goes to become a 2 deviation day or whatever? I still have, points of profit in here. And there's still a lot of premium left inside my contract now because I'm way below the floor. I'm deep in the money on this contract, okay? And but I'm not going to wait around for premium. I mean, I'm up. I'm doing well. I don't need to be greedy. That's my profit level. I don't care what the spread says. I'm up $100 a contract on the spread. I'm going to take half of them off. I'm going to put $500 in my pocket. No matter what, this is going to be a good day. Okay? So I'm watching it, and it does drop a little bit. And I'm thinking maybe I should take some, but then it starts pulling back up. It does this little dance right here, and I'm like, you know what? Now it's doing its dance around 1 deviation. I don't know if it's going to fly down or not. On this one, I think I'd be more comfortable just locking the profit, looking for my next trade. That's when I hopped on here, so I didn't take a second trade. But and it basically did a little dance right there, and then it, just try to go through, did a little dance, and it did. It bounced, and then it decided to actually break through that with, again, I mean, all we've done today is exceed volume. But the volume went on down to, what do you think it's going to go to next? 1.5 deviations, right? So it bounced right down to 1.5 deviations right off that level. Did another bounce right off of it. So you could have played this in a lot of ways. You could have taken profit. When you saw the bounces, you could have went short, taken profit, short, taken profit. Could have fallen down. It bounces up. You set a new resistance zone. You could have taken some profit. Goes down back here again, take profit. I mean, you can play between these support resistance zones all day long. You don't have to get the big trade. But I want to show you the one trade that I did this morning. This is the one I did live on air right here. But going down right there, and then as it bounced back up, I took off my final profit on the trade. So hopefully there's a couple, tidbits in there that will help you. But the things that I look at, I'm looking at it breaking through. I'm looking at I like it when all the stars align, okay? I mean, there's the systematic rules, which you have to even understand how to read anything, okay? But there's also, like, just backing up and just looking at the thing and seeing what makes sense. Like right here, okay, well, this went green, that went green, MVP finally went green. The market's flat as it can be. And we're at a 1 deviation, and we're at a resistance. Do I feel real comfortable buying yet? Like right here. I mean, just look at this. I mean, I know it's always easy to say the answer when you can see the right side of the chart. But, I mean, this is when you finally get the green. Like, but look at what the market's doing. Does that make sense that you'd want to buy right there? I'm sure your trend catcher says green, trend flip says green. There's all these things saying green, but look at what the price action is doing. It's just flat. Does that click with anybody? Interactive, yes, no. Mic coming through. All right, there we go. So I just want you to see that, like it's flat. Okay, I mean, I'm going to make it bust above here. Like, here's this recent high bar. If I'm going to buy on this green, it's going to bust above this high. Okay? And people go in the market's flat and they're like, oh, it's green, I'm going to buy. But make the price action say it, not just the indicator. You still want to read price action. Price action is king, okay, in trading. Or queen, whichever one you prefer, right? So, but it is the dominant force in trading. The indicators are there to help make it easy to see price action. Okay? So this says, hey, you should be paying attention to a buy trade. But right now, I mean, it's a little harder to see, I know, but your trend band is actually short. All right? your charts right there are, going sideways, might not be time to buy yet. If I get a hint of sell, I'm probably going to sell, and where am I going to take profit? Right back down here in this same zone. Okay? And to me, this is really important to learn this little stuff because this is the fun stuff. This is the easy stuff. This is the stuff that we all love to brag about. This is the stuff right here that I think you have to battle on a daily basis. Okay? So it's those little zones. And so you really need to learn how to read those little zones. Right? And then going on over here, yeah, we'll talk about risk reward on the spread. I'll show you that here in a second. And then it hits it, and then you can go for a bounce again. Is this a bad trade? I mean, look at this. I can go in here now, and I wouldn't mind doing a bounce on this trade as long as I'm setting my stop like right below this low. So if I was going to go short, I mean, I'd have a tight stop. Okay, I mean, I'm just talking like a few ticks above that high. If I'm going to go long, I'm going to put a stop a few ticks below that short. So it comes down here, it hits this, I get a little green, buy it, gets up in that, sell it, get out, go short again, set my stop right above that recent high and low. Okay? So that high right here, that low right here, and I see a support and resistance band show me that trend. Okay? And then all of a sudden we start getting these support bands, go short. And then the MVP flips. So if you had that last one, let's say you bought into that last one, it didn't quite hit your band, it comes down, it hits it, you're out of that trade. Now you could look to go short. If you're to go short, where are you going to go? The next deviation level. Okay? Comes down, boom, hits that, you're going to take some profit. And then it oscillates. Okay, now we got a new band. Now we can target, we can go short again, we can target this lower level. The stop right above this high. Which, look at that. How that high, basically stop is the same on the different levels. And you can just play right in that range. There you go. So you got the short, you took profit. You could look at it long if you wanted to with a really tight stop. Okay? You took it, you would have got stopped out, left a few ticks, but that's after making. It doesn't look big. But I need to show you this because it doesn't look big, but it's big. Here. Okay, like if you bought over here on this contract, all right, or even let's just say this one, this important zone, either one. But we'll play this one for now. So you bought on this one, okay? I mean that's 10 points. I mean, if on one contract, 10, times 20, that's $200. $200 trade right there, just on the Nasdaq futures. Okay. So, and again, it comes down. If you want to go long again, if you want to jump the gun, you can just use a really tight stop right below that zone. I'm okay with taking small losses. Go in, so you go down, you're looking for that, tight stop, boom, that was it, boom, another one. Okay, that one's formed, let's buy, tight stop, flies up, it forms another, resistance zone, I'm going to take profit. Literally, you can just trade these tight stops and fade these things if you'll trade, and you got to take your stops, okay? So that way you're ready to go, because if you don't take your stops, then you're riding this thing down, and by the time you get back up here, you've only made half the profit. Take the small loss and move on to the next trade. So very easy way to help you trade some of that shot. Okay? Yeah, exactly. And I like what you're doing, Trader Joe, with the ATM. That's awesome. The one thing I would do, and I do the same thing. I'll set up ATMs and stuff when I trade, but I move them. So I move them on the DOM. So I have them up, and I move, or on the chart, whichever way you like to trade. I prefer the DOM. A lot of people prefer the chart. But I like to move them below where that high or low is. So that way it's not just a random 5 tick or 10 tick or 6 tick, but I do like to, again, use that price action to be king. So the system gives me context. Price action style, okay, is king, saying, hey, you know what? Here's a low, here's a high. If it breaks this, I need to be out of the trade. So, exactly. And then you can adjust the profit also to be right inside that zone. Okay, so now question came about risk reward. So I added on a second position right before it tanked the other half of the direction there. So it's right here I added on the second position. And it went against me a little bit, but it was really low risk. Okay? So let's look at that contract. Okay? And what I was looking at this 43.30 to 43.40. All right? And I sold it for, so let's do a little math first. Okay, where's my calculator? And right here, sold 10, sent it, filled at 43.37. Okay, so if I go short a spread, my risk is the difference between the ceiling, my max risk. It doesn't mean I can get out before then, okay? But in this case, I was like, I'm okay with this. But so 4340.0, okay, minus 4337.1. My risk is 2.9, okay? The last decimal in a spread. What is it? What is the last decimal? Is it 1 or 0.1 or 0.01? Looking at this NASDAQ US Tech spread, what's the last decimal? Where is it at? Is it 1 or 0.1 or 0.01? If you look at the quote, it's 0.1. You can even see it in the floor ceiling. See how it says 4330.0 to 4340.0? So there's one space past the decimal. So I can just divide that by 0.1. I get $29. I'm risking $29 on this trade, okay, per contract. How many contracts does it take on NASDAQ or US Tech to equal one NASDAQ spread? You can tell me, how many contracts does that take? 2. Okay, so let's multiply that times 2. So $58. Okay? I'm risking $58. How many points is that on a NASDAQ future? How many points movement is that? It's $20 a point on a NASDAQ future. Okay? If you don't know, every quarter is worth $5. Again, that's on that little paperclip icon I showed earlier. So 3 points. I have a 3-point stop loss, basically without having to have a stop loss at all on the trade. Okay? $58 on the trade right here. And then I did 10 of them. So since I have 2 here, I'll go ahead and multiply times 5. $290. That is my total risk on this trade, $290. Okay? That is also my margin on the trade. So, yeah, I'll get that. I mean, that's pretty huge. Again, 4340.0 minus 4337.1, $29. I may have done that. $29. Yeah, $290. Yeah, so that's it. $290. How much is their margin if you want to trade NASDAQ futures? I'm doing 5 NASDAQ futures equivalent because it's 2 per 1. How many margin is it? How much margin is it? Who knows? For day trading. So for intraday trading, not the main margin and the initial and all that stuff. Let me show you how to find out in case you don't know. Okay, so if you're with Ninja Trader Brokerage, so here's Ninja Trader Brokerage, then just put in margin. There we go, margin. And then NASDAQ, E-mini NASDAQ 100 futures, intraday margins, $500. Okay? So $500 for intraday margin. So if you're only putting up $500 for 1, I'm putting up $290 for 5. Am I getting better leverage than you if you're using futures? So this is why I sort of liked it. Okay? I mean, I would have put up $5,000 or what, $2,500 to do that on futures. Okay? I only put up $290, and my risk was $290. Okay? My risk is uncapped if I do futures on a short. It's capped theoretically to 0 on a long, right? So I have a $290 cap. Not bad. This is the second trade. This is a smaller trade. And so I go on this one, go short on it, comes on down, and I basically take max profit. I end up buying them back at 4330.4. Now, I made a mistake because I was talking on the show, and I should have put in my take profit really at 4330.6. Because one thing I always teach on the spreads and the binaries is if you're looking to take profit before expiration, it is wisest to put it at whatever the bid offer spread is. So on NASDAQ, it's 0.4 on the US Tech 100. So a little bit above a tick on NASDAQ futures. So bid offer spread plus like 2 Nadex ticks. So in this case, like 0.6. So I should have really put it at 4330.6 because the liquidity dries up when there's no bid offer spread. When there's only like one side being quoted. And so like the market maker put up 1, took it. 1, took it. 1, took it. Okay? So I could have got out all 10 if I would have set it at 4330. But So I got out of that trade, boom, max profit on that trade, and with very low risk. And so if we go in and we go, okay, what did we make? What was our final P&L there? Okay, let's go here, 4337.1 minus 4030.4 times 10. Or, well, times 10 again, 0.1. Okay, so 670. So basically at max profit, what I show right here, at max profit, at $670. Could have made technically $4 more if I held it to expiration, which I don't really mind doing, but I like to close trades out, especially if I'm on air if I can, or at least have that take profit there. And I'm like, this thing's already capped out. There's no reason to wait. Let's just grab it. And so we grabbed full profit on that trade of 670. Okay. So that was the second entry. The first entry was a little bit wider, 43.35, 43.65. We got in right in the center, 43.50. So on this one, this is the end-of-day contracts, the ones that you often will see me trade, unless I'm trading like those little oscillation bounces or whatever. But 43.65, then I sold it at 43.49. Because I want to show you both sides. Okay, so this one was $151. Okay, risk a contract. Max risk. Now, I don't have to risk all 151. I can get out if it goes 10, 20, 50 against me, okay? But that's the max I put up. Then times 2. Okay, so now I'm putting up $300. Still less than the $500 you're putting up on NASDAQ, okay? And that's on the daily spread, all right? So $302, and then I do 5 of them. So on that one, I put up more money. I put up $50. But I mean, you look at this. I mean, I made 1,060. I'm putting up 1,500. I made 670. I'm putting up 290. I actually made more money on this trade. So, was either trade bad? No, I'm pretty happy with the result from both of them. But it just shows you that, you know, as you learn these spreads, you know, I want to go short. Okay, what spread do I want? That spread had a low risk. I could pop on 10 more comfortably. I knew I was at that oscillation zone. I'm like, I'll risk 290. Let's go for it. You know, or I'll risk $29 per. You know, let's go for it. I know 290 sounds is big to some, small to some. So, but just $29 a contract. So, to do this, the first trade that I did, you'd need 151 bucks in your account. Yeah. So plus, I guess 90 cents. So, you don't need $1,000, $5,000, $10,000, $20,000, $30,000 account to do this trade. A lot of people go, oh man, but I don't have enough money to trade spreads. I only have a few $100. Well, if you put it 150, you made 100. Now you have 250 bucks. You know. But they're going like, why risk 80? And I mean, I'm all for the binaries. I love the binaries. I make money off the binaries. Pretty good money off them. Okay, I've made some good money today. But I guess I wish every trader would start with spreads. I traded spreads for 9 months before I touched binaries. I traded futures for years before spreads even existed. But as soon as I found out about them, I'm like, this is the best thing ever. That's sort of why I'm the NADEX, you could say I'm a NADEX guru or whatever, but just because, I mean, when I found out about them after all my years of trading options and futures and Forex, I'm like, this is as good as it gets. Because it caps your risk. It, you know, it lets you take advantage of premium. It lets you intraday trade. Unlike, you know, normal options that expire, you know, weekly or whatever, monthly, that move slow and a lot of premium and slow gamma. You know, you have to do larger size. I mean, I can go in and I can trade this exactly the size I want to, how I want to. I don't have to worry about any kind of exercises. Everything is cash settled, you know. Don't have to worry about any kind of deliveries or dates or, you know, that weird stuff you have to deal with on futures. Don't have to worry about weird tick sizes and things in one. So that's good for a new trader. The binaries, I mean, traders go in, they risk 80 bucks to make 10 or 20. You know, I'm not saying it's bad as long as you got it down here doing it consistently. But it's a whole lot easier to put up 150, and when it moves 20 ticks against you, get out and lose 20 bucks. Whereas lose like all 80 if it moves like a tenth of a tick against you at, you know, your strike. So I love spreads. I can do massive leverage. I can trade, you know, I can trade larger positions than I would even on futures. Doing it. So, you know, I'll go 5, maybe 10 contracts on futures at most. But I mean, I'm pushing it, and my heart's a little bit, you know, beating. So, you know, picking up on the future. You know, like, I mean, NASDAQ I'll go larger because it's only 20 bucks a point. But, you know, if I start going over to things like, you know, bonds, you know, or DAX or whatever, where it's a little bit larger tick size, course, that gets a little more serious. But yeah, you don't have to have a huge account, and you can trade like you're trading futures. And you need to understand the proximity. You need to understand the premium and how that works. But I mean, proximity, to make the simplest definition I can give you, proximity. Okay, we go over here. Proximity is the difference between where the spread is priced and where the market is. This is saying this is 43 NASDAQ ticks, okay, 43 quarters, all right? So it's a little over 10 points, 11 points from where the market is currently priced. It's just how far away is it? Like, this would not necessarily be a great trade to buy because the market would have to go all the way